Let's get you across some of those broader market moves and some of the broader themes behind today's trading. Peter McGuire from XM joins us live in our Sydney CBD studio this morning. Very good morning to you, Peter. Now we talk about the trade wars, some of these big themes that are going on. Adam was just pointing out the downgrade from the IMF to its global growth forecast. Is this having an impact on trading today? How are you looking at the first hour of trade on the ASX?
Well, good morning, Leanne. Look, it's been a flat start. Let's just see what happens as far as Tokyo, if that gives us a little bit more push after lunch. But at the present, I think it's just going to be a fairly range-bound sort of day. We've seen some, interesting trading over the last couple of days as far as US, and hopefully the rest of the week can see a little bit more upside. But at the present, I think it's just, hold on to your hats and let's see. Maybe it's a little bit like the Sydney weather.
Peter, we know that obviously the big story for the equity market recently has been the bond market. The bond market has been selling off. Those US Treasury yields have been rising, and that's really been causing a lot of angst across markets at the moment against a backdrop of rising interest rates. But of course, we also have the ongoing trade tensions there between the US and China. How do you sort of see it all panning out and the impact going forward in the future for equity markets, particularly if we do start to see global growth slowing down as the IMF is predicting?
Well, and probably put into that as well, President Trump coming out over the last 24 hours and saying he doesn't want to see, they're raising rates too quickly, his mantra. So probably from a business perspective, you've got to take that on board as well. Yeah, that's going to be a very interesting 19. People are saying you're going to see 3 rate rises over the year, and some are even saying you're possibly a 4. I think that's probably a little bit optimistic, and what impact that naturally has to our market and Asia. So, it's a little bit of a wait and see. I take on board the IMF numbers, and you've nearly got to be, we're also getting hit reasonably hard across Main Street as far as crude oil prices. And they're well and truly up considering where they were this time last year and what impact that has to the wallet and the purse of the consumer globally. So that needs to be also considered. With higher rates also comes that crimping as far as spending power.
Yeah, you can obviously look at it from both angles, can't you? The impact to consumers, which is not good news, rising petrol prices, rising oil prices. That's not what we want to see as consumers and as the average household. But for a lot of those energy producers, of course, it's great news. Well, where do you see technically looking at the crude oil price? Where do you see it going from here?
I think a couple of things. First off, what happens as far as Iran, the Venezuela situation, and of course leading up to OPEC, that's the 3rd of December meeting in Vienna. So it's had a very strong uplift. The Saudis are saying they want these sort of prices, and so are Russia, and it's going to be a super meeting because they've got more members coming on board, or more external members joining the forces as far as OPEC. So naturally they want to see, and they've got a stronger US dollar. They're very happy with these sort of pricings. What impact, if you see geopolitical or these weather outages, which we've currently got those storms, hurricanes in the Gulf, you could see actually crude have a little bit of a spike from here. So, that again is forcing more uncertainty from a trading perspective, and the hedgies are all over it.
Well, just on the hurricane, actually, because we know that the Hurricane Michael is barreling towards the Gulf of Mexico. I think 13 of those platforms have already been evacuated by some of those energy producers, and they've turned off about 1/5 of production already. Yeah. What is the short-term implications, the short-term impact likely to be? Is this something that tends to sort of have an impact and then we move on fairly quickly? Are we already starting to see it impacting the oil price right near here as we stand?
Well, we are. First off, we're seeing an impact. The prices are up. Secondly, the traditional season for hurricanes runs another month and a half at least, even nearly up to 2 months. So the early part of December in the US, that is. And we've got that warmer waters, and in turn you could see another couple of storms behind Michael. So it depends on the severity, depends naturally on what happens with the platforms and production. And if you start to have an impact there, naturally prices are going to ramp up quickly. Not unusual this time of year. You could see a $3 or $4 price, hike. And I think the traders are very mindful of that. They're just really keeping a very close eye. And from a trading side, it could be, pretty good opportunities.
Now, we're watching markets around the region with a close eye as well, Peter. We know that there's been a lot going on with the Chinese equity market and the Chinese yuan. The Japanese equity market as well, with the Nikkei 225. It's been under heavy selling pressure the last few trading sessions. It's really underperformed. A 3-week low, I think we're watching for the Nikkei 225. Why do you think we're seeing a lot of this aggressive selling? And what are you seeing on the technical picture as to where we go from here for Japan?
Well, I think first off, you've got to take on board that it's at a 27-year high, the Nikkei. It's had a really good uplift over the last, 2 years. It's been a feature trade for any trader globally. Secondly, I think it's just a little bit of profit taking, Leanne, no more than that. You'll see that, a little bit of downdraft. I'm not suggesting you're going to see a big wipeout from here. I think the market will probably consolidate. You could see a little bit further downside, but it'll find a floor, and profit taking is all about what traders are after. Don't marry a trade. If it's showing it's got a reversal, then a lot of traders get out. Japanese have a very, very high appetite for FX and, of course, for the Nikkei, their homegrown stock market. So they've had a very strong push up, and I think a lot of the Asian traders are mindful of that. And it's just, a wait and see. I think probably November, with the midterms and a couple of other things pointing into it, it'll be a return to the upside for the Nikkei.
All right, fantastic. Peter McGuire, we'll leave it there. Appreciate you joining us today. Thank you so much.
Thank you.